Welcome back to Investing and Trading Live, sponsored by Trading Academy. I am your host, Josh Lilquist, with my good friend and my good pal, Mr. Al Connickson. And on the last segment, Al was dissecting this whole retirement aspect of our life. You have strategies that you're put into, whether it's a broker, advisor, your company sponsor, whoever it is, that are just one-directional strategies. And if you talk to anybody that has 401ks, IRAs, they always say, I don't have enough.
Right.
I need to build more for later. I need to save more. And why not have a strategy that's designed for what you need to get out of the market? So we covered these different option strategies on the last segment to have the opportunity to be conservative, but yet still have the opportunity to protect what you have and build them to where you need to be. So we had investing classes that people were calling and texting into. So if you're driving right now, you might want to pull over, because if you call or text the word trading to the number 952-905-0975, you're going to get 2 seats for an investing class right here at the Academy or at a location near you. Call or text the word trading to the number 952-905-0975. And that's for 2 seats, one for you and one for a friend. Also, you can go online, go to learnwithota.com, and you can pick your own seat there. Multiple dates and times available for you. We also appreciate all the subscribers on the podcast, Apple Podcasts, iHeartRadio, and Spotify. If you missed part of the show, go to one of those locations and check out Investing and Trading Live, and you'll be able to check out some of the outtakes in there as well, especially if you go to the YouTube channel. Just go to my name, Josh Lilquist, on that. So, Al, I know you have a lot more to discuss about retirement accounts, retirement strategies, the costs that come along with when you have them managed by somebody else, and how you have the opportunity to eliminate those costs by self-directing. Mm-hmm. I think that's important for our listeners to understand is you have the ability to self-direct your retirement accounts. By the way, you should, because who is going to have your best interest in your money? You or you?
You and your kids.
Exactly, or your grandkids,
yeah.
Right?
But I think people don't really understand the negative impact of the fees, the cost of having an account. One of the great things about having the IRAs now is that there's really no cost to you. There's a lot of studies that show that even at 2%, if you have a 2% cost in your retirement account over the course of your working years, that can cost you 50 to 75% of what you could have in your accounts. That's one of the reasons that we have a retirement crisis here. So
that's missed opportunity, basically.
Totally missed opportunity, because every dollar that's taken away from you is no longer there growing, compounding. If you start early enough, each dollar that you invest could end up being worth maybe $10,000 or $20,000 or $30,000 at the end of your working years.
Got it. Okay.
And you're missing out on that. The cost of having a retirement account can be, I use that 2% figure. Well, that can really be on the short side, because if you have mutual funds, the actual cost, and this is, you can do a Google search on this, but the real cost of owning a mutual fund in a retirement account, a non-taxable account, is about 3.17%, which doesn't include what we call advisory fees and soft dollar fees, and that could be an additional anywhere from 0.5 to 2.5%. So you're looking at those fees that are just bleeding money out of your accounts. Plus, you also have an impact much stronger than that you mentioned in that last segment, and that's the impact of crashes and corrections on your retirement accounts. If you have a 401k or 403b, you're pretty much 100% exposed to these drawdowns. It could be anywhere from 10 to maybe 50 or 60%. And the problem is, if you retire in a year when that happens, and then you start drawing money out of your accounts, you never really get back to where you were before. So making sure that you're protected is the most important thing. We think that in your retirement, you need to be able to continue to grow your wealth while managing risk. And unfortunately, a lot of people now that find themselves in a position when they retire, there just isn't enough money there to last another 20 or 30 or 40 years. They start to take on too much risk.
Yeah.
Or they just rely on what Wall Street has told them to do. As you get into those retirement years, you just put more of your money into fixed income vehicles, which for the most part maybe give you a 1 or 2% real rate of return after you look at inflation.
Yeah.
That's not even considering the fees that are taken out.
So you just have me pondering here for a second, because we speak to a lot of people that are coming to us for help that want to be able to do things on their own, and they have money managers managing their money. And just this is just based off of what I've heard people tell me, but I want to ask you, and I don't want to say that they're being misled, but I kind of want to unpack this a little bit, okay? Mm-hmm. So if a person is going to a broker or advisor and they're going to say, well, how much are you going to charge me? What percent are you going to charge me for this? What are they going to typically say?
Probably 1/4 to 3/4%.
Okay, so that doesn't sound very bad if you think about it.
Right.
But if you're saying they're being put in, which is most people, mutual funds, those real costs are much higher. So I'm not saying that they're being misled, but maybe they haven't been told the whole story. So there's a problem with that.
Yeah, and the problem is you can't find the real story.
Exactly.
Because if you try to read a prospectus, you're never really going to see all of the costs that could be there. I mean, there's marketing fees, there's transaction fees, there's legal fees, administrative fees, paperwork fees, soft dollar fees, revenue sharing fees, all of those things.
That's a lot of F words, Al. We're upsetting our customers now.
Sorry about that, folks. Well, think about this. Look at a mutual fund manager that is managing maybe billions, if not trillions of dollars worth of investments. Do you think that person is getting minimum wage?
I would say probably not.
Probably not. These people are probably making millions of dollars a year, and there's usually not just one person. Well, who pays for that? You do. That's exactly. All coming out of your return. So your portfolio, the investments you have not only have to grow to offset that, but also you've got to offset inflation. The cost of holding the fees, inflation, all of those things, which oftentimes means that people have to take on more risk than they should have and not know how to manage that risk. I mean, there are things that you can invest in that give you the potential for much greater returns, but maybe that comes with more risk if you don't know how to manage it. All of those assets that provide the potential for big returns, you can manage the risk. And if you can't manage the risk, you don't do that particular trade or that investment, you go on to something else. The number one thing that we concentrate on in teaching is how to manage risk. That's the number one thing. Learn how not to lose first before you learn how to make money.
Okay, so that being said, I know you've helped a lot of people get started with that and kind of get over that hurdle of what they can do. If there was a couple steps for someone to understand what to do to start to self-direct,
right.
What do you think if the first couple steps would be? And then I know we talk a lot about this in the investing classes I'll give away seats to after that, but what are the first couple steps that you think would be, and say in about a minute and a half?
Yeah, well, everybody's a little bit different as to where they are, what they have, and one of the things we do is help you to structure a plan based on you and where you need to go. But one of the first things is understand what you have in your retirement accounts. Most people don't know. They know they have an account, they know there's some money there, but they don't really know what's in it. So understand that first, understand what the opportunities are, and then look at the possibility of setting up an IRA or maybe a Roth IRA, maybe outside of that retirement account or in lieu of that retirement account, and find out what the opportunities are that can give you the possibility of having a much greater financial number when you retire, and you also have to understand what your number is. What do you need in retirement to live the life you want to live? Don't just look at what Wall Street tells you can have based on the amount of money you have. Let's look at what your goals are and then see if there isn't a path that helps you get from where you are to where you want to be. And that's going to change throughout retirement too, because when you live 20, 30, 40 years, there are changes that are going to happen both to you and in the economy and the markets.
Yeah.
So you have to know how to manage those and to get the greatest benefit out of them.
Yeah, and then also too, at that time when you retire, your income stops. Rather than just draw it down, have an income strategy off that retirement account. And I know a lot of people are listening right now, scratching their heads, like, why didn't I do this before? Like, why didn't I know this before? Well, you haven't been trained or counseled on that before. And that's why we have these investing classes where we cover these retirement accounts, these retirement strategies to help you build for what you want in the future. And it's not always monetary. Maybe it's just freedom of time, freedom of location. We have a lot of people that want to go visit their grandkids more and be more grandma and grandpa daycare. I know they love doing that. They just as much as they love dropping the kids off when they're done,
yeah, sure.
They love when they bring them over, right? So that's what we cover in these investing classes is those strategies, those techniques, and really what's actually available to you. So to come into these investing classes, I want to invite you simply by calling or texting the word trading to the number 952-905-0975. If you're driving, you might want to pull over. So call or text the word trading to the number 952-905-0975. If you text the word trading, we'll make sure we'll get you a call right away and make sure we find a date that works the best for you. We have these classes during the week, the weekends, and also in the evenings, so pretty much anybody can attend. You can also go to learnwithota.com and you can pick your own seat there. That's learnwithota.com. Al, we've done a lot of stuff here today on retirement accounts and income accounts in the first couple segments. Let's hear today's OTA tip of the week.
Well, we see too many people that have relied on hope and luck for their financial life now and in the future. Hope and reliance on luck are not strategies, by the way, and waiting for the right time pretty much assures failure. Unless you have figured out how to control every potential life influence, the right time almost never happens. You might not ever have a right time, but there's a right now time, there's a today time, which could be for you the best time. Waiting just means missing out on repeated opportunities that are gone forever.
I like that. And I just kind of want to add a little bit to that. You talk about luck, right? Now, sometimes the harder you work, the luckier you get. So if you want to do more, learn different techniques, learn different strategies, and really take charge in your financial future. Take that action and do that now. Call or text the word trading to the number 952-905-0975 or go to learnwithota.com for an investing class near you. Had a great day. As always, same time, same place next week. Until then, retire young, my friends.